Good afternoon, everyone. I'm Gabby Ford from the residential research team at Savills. So I'm going to give you a bit of an overview of what's happened to the prime London housing market since the beginning of the year and the impact of COVID-19. So just to start by clarifying what we're talking about here, I'll be covering the prime market, which broadly means the top 5 to 10% of the market by value. Within London, it covers the areas defined in this map, with central London, so markets such as Knightsbridge, Mayfair and Notting Hill, being referred to as prime central London. St John's Wood sits just outside central London in what we would class as prime northwest London. But actually, in terms of price point and by a demographic, it is actually very similar to other central London markets. Now, in terms of where the market sat prior to COVID, it had been shaped over the last few years by taxation and political uncertainty, which has weighed heavy on pricing. So if we look at annual price movements in prime central London, we can see that strong growth throughout 2013. But when the stamp duty reform was announced for higher value properties in December 2014, prices started to fall. This began to be priced into the market and those price falls had started to ease. But then we saw another change to stamp duty, introducing a 3% surcharge for additional homes, as well as the EU referendum in June 2016. As Brexit negotiations unfolded, there was a significant amount of uncertainty in this very sentiment-driven market, and as such we saw ongoing price falls. But with the result of the general election in December 2019 came a bit more certainty, and we finally saw that in pricing, with values falling by just 0.3% across prime central London in the year leading up to March 2020. If we compare this to what has happened to prices in St John's Wood, you can see it has followed a very similar pattern to central London, but the price falls have been much less severe. So with a strong Conservative government under Boris Johnson at the end of 2019, some of that political uncertainty had started to ease. Likewise, some of the uncertainty around Brexit had lessened, with the UK leaving the EU on the 31st of January and entering the transition period. With that greater certainty, we saw a bit of a Boris bounce in transactions, with the number of sales over £5 million doubling in Q4 of last year compared to Q3. And December saw the highest number of sales in a single month since 2014. So there was a definite feeling that many of those buyers who'd been waiting out the market since 2014 were starting to make their move. And with values down by 20% since 2014 and by 16% in St John's Wood, the market was looking very good value. So all of this was pointing to the prime London market being overdue a recovery. But of course, we saw the outbreak of COVID-19 with the UK going into lockdown in March. Unfortunately, this brought back some of that uncertainty to that already discretionary market, and we did see values fall between March and June. So by 1.2% across central London, and by a smaller 0.7% in St John's Wood. And with the country in lockdown, so was the housing market, meaning we saw very few transactions happen. So transactions over £1 million in central London fell to about a third of their 2-year average during April. But the housing market in England was able to reopen in mid-May. So where has that left the market now? Well, despite transactions dropping to just a third of usual in April, we have seen an incredible amount of demand re-enter the market since it reopened. And this is very noticeable when looking at the amount of traffic to Savills property pages. So we can see it kept a relatively steady pace before lockdown. It then dropped as lockdown first happened, but we've then seen it increase quite significantly. So visits to the property pages on a weekly basis are currently 60% higher than they were before lockdown. And if we break that down by whether that visitor is based in the UK or abroad, we can see it was particularly international buyers that were fueling that growth in website visits during lockdown. And we found that interest on the website has fed through to applicant levels as well. So new buyers registering their interest for property is running 51% higher than it was at the beginning of the year. And we're starting to see that surge in demand coming through in agreed sales too. So, if we look at the number of sales over £1 million agreed in each month of this year compared to the same month last year, we can see that dip that happened in April and May, but then a huge recovery we've seen, with sales in August 128% higher than last August. Now, we've also seen an increase in new instructions on the market as well, but importantly, we've seen a significant increase in the number of price reductions, suggesting that the market still remains very price sensitive. Now, some of this increased demand is simply displaced from when the market was in lockdown, but there's also those people who have been waiting for a number of years for the market to recover, and those who may have accelerated their decision to move after being stuck in their homes for months. But we've also seen a bit of a boost since it was announced there would be a stamp duty holiday up to £500,000 until the end of March next year. And whilst much of the activity in lockdown was being driven by domestic buyers, obviously because of the travel bans, we are starting to see demand return from international buyers. Now, one major driver of this is the currency advantage that many buyers have. So, taking into consideration the price falls in prime central London since 2014, as well as the weakness of sterling, it means that a buyer purchasing a £5 million property in euros is paying 27% less today than they did at the height of the market in 2014. And for those buying in US dollars, that discount is even higher at over 40%. As such, we have actually seen an increase in international buyers, particularly in the new build market. So international buyers have increased their share of the market by 20% since 2016. And for St John's Wood, 40% of buyers this year have been international. And if you look at the associated costs of buying in London compared to other global cities, it does remain very competitive. So other cities such as Vancouver, Hong Kong and Singapore have incredibly high taxes for overseas buyers purchasing property. And in other markets such as New York, you pay a mansion tax to own a property over $2 million. So with the current stamp duty holiday, the cost of buying, holding and selling a $2 million property as an overseas investor in London is significantly less expensive than other markets. Now, there is going to be a stamp duty surcharge introduced in the UK next April at 2% for non-domiciled buyers. But even with that tax, we can see that London still remains very competitive. So bearing that all in mind, what do we think will happen next for the prime market? Well, of course, much is going to depend on how the UK weathers the storm of COVID-19. But economically, there are a few reasons why this downturn is quite different from previous ones. So firstly, house price growth in the run-up to this crisis has been quite modest, both across the whole UK market, but also across prime London. So in the run-up to the global financial crisis in 2007, prices in prime central London were increasing by 20 to 30% year on year. Whereas this time we're coming out of a relatively long and slow downturn since 2014. Interest rates are at an all-time low, with the base rate at just 0.1%, meaning mortgages are incredibly competitive. But banks are being slightly more cautious in high loan-to-value lending. The government has introduced a number of measures which have protected the economy, such as the furlough scheme for workers and mortgage holidays to prevent people going into arrears. This means that economic forecasters are expecting this to be a V-shaped downturn, with a short, sharp fall this year, but with strong economic growth next year. So we think that there will continue to be activity in the central London market going forward, with the levels of demand we're currently seeing, but the market could be price sensitive because of these economic factors. But whilst GDP is expected to fall by around 10% this year, it's also expected to bounce by around 10% next year. And although forecasts for global GDP growth from other markets are likely to be slightly lower, there is still plenty of capacity for wealth generation from other markets. So in terms of what that means for pricing, Across wider Prime London and in Prime Central London, we expect some downward pressure on pricing this year, with relatively small price falls and significantly smaller falls than we've seen in previous downturns. And similar to the shape of economic forecasts, we expect more of a bounce next year, particularly if there is increased demand to beat the 2% overseas buyer stamp duty surcharge before April. Within Prime Central London, we expect, it being a more discretionary market, that it might take slightly longer for that bounce to come, and there may be some lingering uncertainty if Brexit negotiations extend into next year. But over the next 5-year period, there remains significant capacity for growth within Central London and across the other Prime London markets. So, in summary, levels of demand are currently very strong, with the number of sales being agreed above £1 million, up 128% on the same month last year. This strong activity and the falls we've already seen in Prime London market should insulate it from any greater price falls this year. Because of those price falls we've already seen and the weakness of sterling, buyers in US dollars could be paying up to 40% less today than they would have paid in 2014. This has led to an increase in international demand this year. And going forward, although a softening of global wealth generation may slightly delay recovery in Prime Central London, it still leaves capacity for growth for values to increase by over 15% by 2024. That's all from me. Thank you very much for listening.
Hello everyone, thank you for taking the time to tune into our webinar today. My name is Fahd Abu Aisha and I'm the Middle East Director for Regal London. Today I want to present our flagship development, 1 St John's Wood, London's new number 1, which is a world-class collection of 112 apartments and penthouses, a stone's throw away from Regent's Park and overlooking the world-famous Lord's Cricket Ground. Brought to the Middle Eastern market for the first time, the launch will be held in our office on the 15th and 16th of September. So I'd like to start by providing a brief on the development. So I will play a video, a 3-minute video giving an overview. Please see next.
What makes this development so special is its location. It has a lot of open space in an unusually close proximity to the very centre of London. St John's Wood High Street is just a really charming, special place. To be immediately overlooking Lord's Cricket Ground makes it a world-class location of a very special development. It's very important to this design to draw upon some of the elements to be found in the Victorian mansion blocks in the area. And the whole philosophy and character of the design is therefore seamless and consistent. Clean lines and contemporary detail, but with this rooting in history. 1 St John's Wood is designed a little bit like a hotel. You've got very generous reception area, very high quality concierge, where you just arrive, drop your keys at the door, and it's valet parked. And so it's not only the quality of the design of the building, but also the quality of the service it provides. The facilities provided within the building include a private dining room, a cinema, And the Regent Spa, a swimming pool, a gymnasium, and other health and spa facilities exclusive to the owners of the building. Something that is particularly special to me is that there is a rooftop garden, and from there you can sit and enjoy the cricket at Lord's. Another special thing about this development is the collaboration between Regal London and Squire & Partners. We are retained as both the architects for the external envelope and the designers of the interiors as well. We are very fastidious detailers, and what we're really trying to deliver is a world-class design in a world-class location.
The area of St. John's Wood is a quiet retreat from the hustle and bustle of central London, despite its proximity. The development is very well located, as you can see, on the corner of St. John's Wood Road and Park Road. It's about a 15 to 20-minute walk up to Baker Street, it's a 5-minute walk to Regent's Park, and it's a short distance up the road to St. John's Wood Underground Station, which has excellent connectivity into central London and the financial district as well. Designed by the renowned architect Squire & Partners, One St. John's Wood features classic architecture befitting of the heritage of its location, and inside the homes are equally crafted with the highest specification of materials, appliances, and detailed design. All the apartments come fully finished when you purchase the apartment. As mentioned earlier, there are 112 apartments, over 11 floors in the development, and I just wanted to share with you a sample floor plate. This is indicative of the second floor, but the second floor runs on the same stack up until the 9th floor. They're exactly the same floor plate. And as you can see, there are 11 apartments on the floor. And so these are the same 11 apartments running up until the 9th floor. There is one 3-bedroom, which is the 11 type in the top left corner. There is the 010, 09, 08, 01, and 06 apartments, which are the 2-bedrooms. The 1-bedrooms are at the back, so they are the 02, 03, 04, 05. As you can see, the 4 aligned next to each other at the back. And the 07 on the right is our studio. We will be formally releasing the prices tomorrow when we launch the development officially in our office. But this slide is just to provide you with some insight and indication on the prices of the apartments. So studios are starting from £995,000, 1-bedroom apartments from 1.125 million, 2-bedroom apartments are starting from 1.79 million, and 3-bedroom apartments are starting from 3.175 million. The payment terms are quite relaxed in that you pay £5,000 to reserve your apartment. It's followed by a 10% upon exchange of contracts, with a further 10% 12 months from the date of exchange, and an additional 5% 24 months from the date of exchange, with the balance 75% upon completion. And the expected completion time is in Q3, Q4 2022. The main point I wanted to highlight today, and what makes our launch so unique and exciting, is that we, as Regal London, have taken the unprecedented move to build our very own show apartment of the development in our office, which I am currently sitting in right now. We've recognized that due to the restrictions on traveling and clients wanting to touch and feel and get an idea of the fantastic specification on offer, we've designed an apartment that you can visit in our office at a time of your convenience, where bespoke viewings can be conducted in a safe and private manner. And my team and I are looking forward to showcasing London's new #1 right here in Dubai.